It looks like there's been a bit of movement overnight, probably a bit more than what I was expecting, but it still tapped some key levels that I'd mentioned in some of my posts that I've put up. So zooming in, I'll start by touching on my most recent post that I put up. 57.5, the 382 was the level that I was watching, but more on a for, for the weekly low. Now that we're already here, I've had to sort of maybe flip my stance a little bit. I don't think that this is necessarily going to be the weekly low, although Tuesday we may get a little bit of a bounce up before coming back down on Wednesday. Up that we had. And going back to our old mate Fib, we can have a bit of a look as to why. We've got the high at 65, pull it down to the low at 52. We can see a perfect interaction with the golden pocket here. I ran to and we saw that happen over the weekend. Pretty much, it was like the end of Friday into Saturday, basically, and then now we've just pulled back. Now the reason why I picked the 382 was it would be sweeping basically the spring up that we saw up to this high here, which happened on before the US Open on Friday. So we've had that now. Right up. They're not super massive, so that's why I don't feel that it's going to be a change of trend, but maybe more, more so just a bit of a reprieve, a little bit of a bounce, shake out some of these shorts that are getting in down here at around 57.5K, 57.8. Squeeze them before we see a little bit more downside. Quite a bearish candle on high volume. But we typically see the bigger candles with the higher volume at the end of a move. And that virtually stopped dead on the 382. Now, to the downside, we've got a cluster of 50% levels here. This one in the middle, which is essentially from that 65K high to the 52K low. And then we've got another one at around 57K, which is from the 65K moment. So that's why I say below 57, we've got a cluster of 50% levels that are likely to hold us up, or at least I hope that they hold us up. We've got a bit of price action going on in the middle here as well, so that this has been a bit of a point of control as well. If we start looking to break down, it's pretty much been wicking down and wicking back up straight through. Even back over here, we saw a little bit of trading, but for the most part, it was straight down and straight back up with a little bit of a correction in the middle. Um, so if we do start getting below 56k, I think this level down here at 52.3 is going to be pretty important. And even the 886 at 5700. If I was to be a betting man, I think the 5700 would be the more logical area. It would give there's a CME. The downside 5700 looks good. It will also be putting in a higher low to this low, which was this is a very key low. This one over here, it was on some pretty significant news. A lot of fear in the market. We'd probably need some sort of event to capitulate us below this point, which is it's definitely possible. And we can't write off this level here between 44.5 and 46, but it's just that we're getting very close. Um, and just with how we sprung out of this level here, I'm not even sure if we're going to get down to this 886. I'm probably around a 25% chance of getting down here. I think that we're going to find support around the 56k level. Um, we need to be open minded to, all right, well, this is what I think. What don't I think is going to happen? And I've been stacking a bit. I'm going to be ready to sort of jump in. It's it's got sort of stepping away from my overarching game plan and putting in a bit more capital than what I wanted to initially. But we do need to adjust with the markets as they churn and turn around. What is good and what I am liking about this longer, and you're going to have to excuse all the lines over here, but we've been in this pullback since March, essentially. So it takes us out to what, about 6 months, into our 7th month now. If we were to have, say, started pushing out of this range back in June, July, then that would probably put us at peaking, in my opinion, around December. The fact that we've been going sideways for longer means that, for me at least anyway, I think it pushes out when our peak is going to occur in towards the end of Q4 this year. On my radar, but I've probably just got a bit more conviction in that theory that we're going to probably peak in around that Feb March period. It gives us around 6 months from right now. I don't think we're going to be breaking into new all-time highs this month, but certainly in that October, November, I think he's likely mark, and then we're going to have 4 months of moving up, which does sound like a lot, but when we look, I might pull up a different chart that's not as messy. When we look at this period here, this is virtually where we were last year, around that September period before we started breaking out. But we had the low come on this chart. It came around here, start of September, and we went up through until March. And now we've had a similar period of pulling back. So whilst the September marked a low, we didn't get the we were to get something similar here, we had the low come in August, which is a month earlier compared to this chart. Although I believe on a chart like it, which is fine. So we get our breakout around August. 2 weeks before the US election, where there's probably going to be a lot more clarity as to who the markets think is going to be front running. At the moment, I think it's around 50-50, and then we start pushing up. And the markets like to rhyme. Um, if we've had about 6 months of pushing up, and then 6 to 7 months of pulling back. If this is the low, we could actually already have started our uptrend here. If we expect 6 months up, and that sort of rhymes with what has been happening. So that's essentially what my game plan is. There is some cause to say maybe we'll go to November last year. If you're looking at some different time analysis, I think the majority are of the opinion that we're going to be going through till November Feb period, I think. And if the markets keep going up after that, then maybe I got it wrong. But I prefer to be safe and to November. And if I am right and through to November, that's already 6 months into the bear market. And we go back here, marking the top in November. We go 6 months on from November, puts us to around May. Well, yeah, give or take, if you had a bag hold. But then, if this is something that plays out where we get the top, 64.5K, and then it comes up to 69K, well, if I sold in this an exit point over here, because what ensues from that is fairly dramatic. And once you're down here, if you're saying, oh, I sold at 64K, 60K, that's still pretty decent. It's a bit like missing the exact bottom and starting to buy some Bitcoin in this period up here. Once you got that breakout, right now, if you're talking to people and you're saying, oh, I bought in Bitcoin at 22, 25K, 30, even 30K, you're going to look like a genius. But back when you were buying at these levels, in the grand scheme of things, it doesn't really matter too much. Even if you bought in at 30K, you're sitting on a 2x at the moment on Bitcoin, that is. Um, I think the cycle peak is going to be in 6 months, Baldrick. Um, the next wave for me is the last wave. Uh, um, so we can do. We'll see if we can do something here, so I can maybe show it a little bit better. Um, I'm not getting this exact because I'm not really zooming. But that's essentially what I think it's going to look like. Elliott Wave's working what wave of five when you're looking at an uptrend, particularly an impulse, which is this is what we've got. We've got an impulse move up, and then the last one's likely to be an impulse move up. And then when you get the corrective wave, it could go something like, oh, piss off. A, B, C. That's a dramatized version. But essentially, this is corrective, so it comes down for your A. B, people feeling that the bull's back, piling in, and then the onslaught comes. You can do a 1, 2, 3, 4, 5 for this move coming down. That's fine as well. We saw it a bit here as well. You can do a 5 count up to this peak. They've got some odd names like the pull indicator. Um, there's quite a few of them. I think a lot of them are actually on CoinGlass. Said that this here was a top, and this breakout, and this is actually sucked to them. They're a multi-billion-dollar crypto fund. They were piling into a 10x position at the peak here. It's 60K, 62K, and they got absolutely slaughtered for it. There was billions and billions of dollars of investor money because they saw the breakout. They thought we're on here. So, I'm not really going to get too caught up in what's what, but you can get this move. So we could essentially peak in March next year and come back and put in another top above it. That is definitely an option, or maybe um, it comes back up and falls short and then goes down, or necessarily willing to take. Maybe I might keep 5% of my portfolio just for shits and giggles to see what happens. But for the large part, I'm not going to have much exposure. And it's not a matter of, all right, in 6 months from now, that's it. I'm selling 100%. Real good news events, and we're not really seeing price move too much. That's sort of a bit of a suggestion that, okay, we're at peak euphoria now. We've got the US is putting in a reserve of Bitcoin. Um, maybe we've got Snoop Dogg tweeting about how he's buying Bitcoin for playing soccer. All this sort of news we start hearing at the peaks. And if we start hearing a lot of that sort of real positive stuff, well, yeah, I'm probably going to exit everything then, because that's definitely a sign of topping out. You get all the good news at the top. People were saying that, oh, the Fed has to call an emergency meeting, cut right now, and everything was fine. Yeah, I can see how it could feel that way. Um, but I bet the last 6 months has felt a long time to sort of chop sideways in a correction phase as well. Um, Playing like this is to shake people out. people think crypto, think 100% gains, 200% gains, and they buy in and they expect it to happen within, a week, a fortnight, whatever it might be. And you do get that volatility, like for instance with Nikkei, and then it's also corrected over 50% from its cycle high. It's corrected what about 65%, nearly 70% from its cycle high, and then from there it's also then regained another 100%. So you do get that massive volatility, but then once you start bag holding, you find it hard to sell out, and you just want it to keep going up and up and up and break those cycle highs. And the vast majority actually, after such choppiness for 6 months, because you got to remember a lot of people are getting in at the highs back in March when we were at the highs. You got people like Drake were tweeting getting into crypto. Um, there's a lot of euphoria, a lot of news around what's going on. ETFs are here. They're going to there's sideways and a pullback for 6 months. They're like, what the fuck? I didn't sign up for this, and they end up selling out. And once they sell at that point now, buying back down low would have been a great thing to do. Um, but we live and we learn. I'm definitely learning myself. I left my for me personally, I left my run getting into alts a bit too late. I feel like I got into too many of them. Um, and then at the same time, once I did eventually commit to getting into alts, I feel like I also did it too early. Like I should have either started earlier or waited longer. But it's fine it's for the next cycle. Just need the world to do me a solid wedding gift. Yeah, hey, that weddings aren't bloody cheap. I remember I got married. Geez, not a lot of money for one night, but it was a good night. Mrs. loved it. I enjoyed it too. But anyways, um, all right. So we're all kosher on. Well, I probably shouldn't say that. We're all sweet on Bitcoin. We might have a look at the US dollar because that is going to see some volatility this week. Um, not sure if you guys remember, I did start anchor down on this bottom side, whether I should be pulling it to these wicks or leave it where it is. But we'll see what happens when we start coming down to test the underside, whether I've got it right or it needs a slight. The Dixie is going to be quite reactive to what happens with the rates because it directly affects it pretty much. If there is the half a point cut, we're going to probably see the Dixie really tank and start getting down to these 98 levels, start tackling this low over here. And we do have a little bit of structure, probably around that 98, which is that's a very solid move down to the downside, and that's going to be great for the euro and also for risk on assets. Um, Priced in US dollars go up. Um, Now that can be a bit of a catalyst for the there at the moment. As we can see, it's on the verge of breaking out. We had a decent sell off 2 weeks ago, and then last week just reversing the entire move on volume, which is good to see. Um, we can't even remember what it feels like to be back at 5,100 points now, and it's within 2019 points of breaking out to new all time highs again. So this is probably something that works against getting 50 points on the rate cut. When you got your stock markets pumping on the cusp of new all time highs, the last thing the Fed wants to do is start contributing to, well, that on face value, they don't want to be seen as contributing to the stock market um, going off its head and popping out. Um, so that's probably where there's probably a little bit of worry or indecision in which way the Fed's going to go. I think I saw the 0.5% cut is around 60-65%. So they are starting to pick a bit of a direction. But that probably just opens up the we'll probably see markets tank a bit, I think, if that was to occur. Do have the Nasdaq though on the pullback, so someone there is probably suffering a little bit, probably Nvidia or one of the big tech companies. Fortunately, it's looking pretty good. It's got a lot more room to move to the upside, but with the Nasdaq, we see a lot more volatility going both ways. It moves a lot quicker than the S&P, but it pulls back a lot harder than the S&P as well. So I've got no doubts that this will keep on chugging along and get up to all-time highs um, quite, quite soon as well. Might just have a quick look. I know out of session trading at the moment, but we have just broken through this hour. So that's pretty exciting for us over here. We've actually, for such a small nation of, I think we're sitting about 28, 29 million people, we do have a lot of wealth in our stock market, um, which is definitely interesting when you break it down per capita. I'm not sure of the exact figures, but yeah, we're definitely um, in and amongst some of the leading nations. We're not a leading nation, but we're definitely within that group. Um, Moving over to the Nikkei, they've had a lot of volatility. Maybe the daily will probably shows the volatility a lot better. So we had the carry trade back in the start of August and sprung right out of it, came back, tested the old all-time high, and it's found a bit of support here, but it's getting some massive swings. Like that's what is that? That's nearly 30% move. Move up ants as well, which is mental. It's a mental amount of volatility. And now it's going up again. So the volatility that's happening over in Japan is pretty crazy. And and this is the sort of volatility that you get towards the end of the 18 and a half year cycle. So I wouldn't be surprised to see Japan's bubble sort of start bursting before the US in the next 18 months, 2 years, something like that. But that's a crazy amount of volatility. And even the move down was huge as well. Price range from the peak to the trough, 28% down. Crazy. But I'm not really worried. I think that the Nikkei is still going to go up, which is crazy to say after 30% swings in both directions, but it'll keep on chugging. All right, see you, Hunter. We might jump into Ethereum. So for Starseed in the chat last month, we got our monthly close below our trading range. And something Ben Cohen touched on was once you do get that break below, typically the following month ends up setting the low. And that's the month that we're in at the moment. So it's no surprises that Ben's right because he's an extremely smart man. I don't necessarily agree with all of his content or his opinions, but I definitely appreciate the effort and his approach to how he comes up with his ideas is very factual, bases it on him. Quite often is correct in his own analysis. And this one looks like it's going to be another one that's sort of correct as well. So 0.03 and from his perspective, um, he, he is careful in what he says online. He says that he feels that Ethereum's going to bottom in between now and December. But I think deep down, he probably is between in his closed circle. He's probably saying, Ethereum's got 2 weeks left to find a bottom and falling knife. But I think the end is pretty close for Ethereum and Bitcoin, and it's coming into some structure as well now. So we've got these wicks over here and these tops around 0.035, and we've also got some over here 0.037 and over here as well at 0.039. We'll just see where the monthly close finishes up and where the wicks end up reaching. At the moment, we're trading below this one, so the next one we look to is this point. And then if we start getting below this point, then we look over here. And we've got some more structures. These are sort of internal structures, and I highly doubt we're going to get down to these points over here. I'd probably say around that 0.037 is probably a good area to start considering a bottom to come in for Ethereum against Bitcoin. And that doesn't necessarily mean that it's going to keep going down against USD. It could just simply mean that Bitcoin starts moving up and Ethereum we might have a quick look at Nia. I know Baltic, you're all over it, mate. But we'll have a quick look. I've got to delete some stuff here. I've got too much stuff on the charts. Um, so we're actually holding up pretty good. This is a 49k low on Bitcoin, and we've got the 52.5k low over here. So in relative terms, that's pretty decent that it held up better than Bitcoin because it's about 11-12% off this low, whereas Bitcoin was around 6%, 5% off. What I don't like though is this candle, but it doesn't have much of a wick. So we are a bit exposed to coming down to around that $3.50 probability about it. Not odds on, but down in daily. See, we had our three green bars coming off the low, which is nice and healthy. We saw continuation as well, volume increasing um, until we get to the pivot. And now we're sort of pulling back. Volume is somewhat decreasing, but for the most part, if you were to sort of smooth it out to be fairly even on this down move, and it's just sort of falling in line with Bitcoin at the moment. Still looking okay for now. Um, Pretty good strike zone, I think. A week down to tap $3.80 and take off again. That'd be perfect world sort of stuff. And it would maintain this sort of low and uptrend. What where body was fairly significant. Also, back when we did make the lows over here, you can see we got rejected at $4.40, which is quite similar to where we're getting rejected, where we got rejected just now at this level. It's just a where do we get some? Yeah, might just check out the near BTC chart. It's not looking too bad. I mean, it would have been nicer to maintain this move up and start tackling these tops. But what we do have playing for us is we've got the low over here from August, and then we've got the higher low here. We've got a bit of a trend line. So that's from this low back here in Feb. As long as this pullback doesn't start taking out this higher low, these points start breaking down. Um, that that wouldn't be great. Wouldn't be great, no. So it's just a bit of a wait breaking back down at 57.5 level, roughly. Um, the weekly close was quite bullish. It's a solid candle, not much wick to the upside at all. But this can be a sign of distribution. You normally see a breakout towards the end, but what has to happen is it breaks out and hang around up here, because if it does, then that means that we're going to see higher, and the slaughter of alts and Ethereum isn't over yet. Key levels at around 57.5%. Um, and that isn't to say that it can't still go up, but if it stays above, it's definitely going back up. I can say with some reasonable certainty. We've got a decent chance that perhaps we've seen clarity come Thursday, Friday this week as to where this sits and what's going. good, and we did talk about. I think that probably draws us to a close for today, guys. Unless there's any specific questions. Oh, Star's gone. Did you have anything, Baldrick, that you wanted me to touch on, mate? I'm keeping in mind that we've got another catch up on, is it Thursday? I might have a quick look. I did do a double this. Yeah, it's on Thursday. It's Friday my time, Thursday for you guys. Um, I'm taking a couple weeks leave. Uh, new oh, new addition to the family that's coming in I think 2 months. So I'm going to be focused on that and spending some time with the missus before she gets any more rotund. So yeah, that's why I thought I'd bulk up this week with a couple voice chats. Yeah, that's right, brother. Be keeping the premium up to date as we push on through the week. But yeah, otherwise I'll speak to you guys on Thursday night/Friday. Yeah, no worries. I understand if you don't make it, Baldrick, but it should be recorded, so you'll be able to catch up at your leisure.